When I first started trading, I remember looking at a price chart and not knowing what to do. When do I enter the trade? When do I exit a trade? It kind of just felt random and frustrating until I found a really simple strategy called the breakout backtest strategy. So in this video, I'm going to break down what that strategy is so you can understand when you should be entering a trade. So what we want to do first is we want to spot proven winners with this strategy. So we want to identify bullish stocks that are trending up. Then what we want to do is we want to wait for the pullback. So we want to be patient and we don't want to chase stocks that are breaking out. We want to wait for them to retrace. So many times a stock is going to break out and it's going to run up to what's called a resistance zone. If you buy in that zone, you could get trapped where the stock is going to retrace, then you might panic sell. So that means you're buying high and selling low and you're going to lose out on a lot of trades. So we don't want to chase, we want to be patient. And we want to wait for stocks to pull back. And what they will do is they will pull back into what's called a support zone. And that is where we want to enter the trade. We want to place a low risk trade in an area where other buyers are also going to step in, because that means there's a higher probability that the stock is going to stop falling, consolidate, and then rise back up from that support zone. So we want to, again, find stocks that are bullish, that break out and pull back, retrace into a support zone. And that is the breakout backtest strategy. So to find proven winners, basically we want to find stocks that are strong, that already are exhibiting good strength, and that kind of sets a good foundation for entering these low risk trades. So there's a few ways to do this. One of the easiest ways for everyone is just to build a watch list from an AI tool. So you can head over to ChatGPT or Grok, and you can just say, give me 50 stocks that are looking bullish heading into later this year. You can get even more specific with different sectors and whatnot if you wish. You can also come to our school group, which I'll show you. We've got a list of bullish stocks that we post and we talk about in that free group. Then what you want to do is you want to confirm the trend with some technical analysis tools. So you want to use a tool like TradingView, where you can confirm that the stock is bullish based on things like the market structure and a technical tool called the Ichimoku Cloud. So let's jump over to the charts right now and we'll see what sort of this means when we're actually looking at a chart. So here I just have Grok pulled up and I posted a prompt call, which read, give me a list of 50 bullish stocks heading into later this year. And then Grok is going to give, a list of AI semiconductor leaders, biotech and healthcare momentum plays, and so on. You can ask them to just create a list that you can copy and paste into TradingView. And this is just an easy, great place to start evaluating some stocks that are potentially bullish. So Grok can do this, ChatGPT can do this, and you can get even more specific with your prompt. Now you can also come over to our free trading group. And you can find a link to this below this video. And here we've posted lists. So if we type in like bullish stocks into the search bar, we've got some posts here where we've got a list of stocks heading into 2026, and then a more recent post in the beginning of the year, bullish stocks to watch. And you can come here and you can kind of see the list. We've got a video for this particular one. And then here we've got a list that you can view and you can sort of just copy and paste and find some stocks here in our lists. So if you'd like to join this group, it's free and it talks more about this breakout strategy as well. We've got a course in the classroom that you can access as well. So what we want to do when we're looking at a chart is we want to first just look at the market structure. So we want to identify stocks that are strong in terms of their market structure. So here I've got a stock called Coin and it's on the weekly chart. So this is TradingView and all of these candles represent 1 week. And what we want to do is identify bullish and bearish market structure. So we can see here back in September 2023, we had a low in this area, and then the candle started to make a high and a low and a high and a low and a higher high and a higher low. So this market structure is bullish. The highs are higher and the lows are lower, and we're moving up and to the right. Now here, the market structure changes to where we're making a lower high and a lower low and lower highs and lower lows. And this is bearish market structure. So you don't want to be buying technically in this sort of environment. But then Liberation Day with the tariffs there where the market kind of dropped in April 2025, what we have here is much better market structure. We're making a high and then a higher low, higher high, higher low, higher high. So this is an area where buying support on a stock that's moving like this is much better to do. And then we can also see later in 2025, coin started to make a lower high and then a lower low, and then the trend turned very bearish temporarily here. So this is an extreme example with a stock that's very volatile. But the main idea is that we want to buy and look for stocks that are trending with good market structure, higher highs and higher lows. And coin later in 2026 may have bottomed, and potentially it starts to make some higher highs and higher lows. And buying support in this area could potentially be good. Keep in mind, it is a very volatile stock. Now, market structure alone is not the only thing you want to do. You'll also want to use some technical tools. So an easy one to use to find the trend of the stock is called the Ichimoku Cloud. And in TradingView, you can just come to indicators. You can type in Ichimoku Cloud and you can put it on your charts. And again, in our classroom, we've got full tutorials about all of these tools. So here you can see I've put this technical indicator on, and basically we want to be above a lot of the indicators. So Tesla currently is above the cloud, the future cloud's green. We are above this orange line, which is called the baseline. That's sort of the medium trend indicator, and it reacted well there last week when there was a big market sort of sell-off. And Tesla has been holding market structure quite well, holding the trend. And it's just below the blue line, which is the short-term trend. But everything is kind of pulled back a little bit at the time of recording this. So overall, this indicator is telling us that Tesla is strong, the trend is good, and you can put this indicator on various stocks to see when a trend is good and when a trend is bad. So jumping back to our presentation, after we build a watch list and we confirm it with some technical tools, what we'll want to do is we'll want to wait for a stock to pull back. So it requires some patience during a pullback. And when there is a pullback, it allows you to enter at better prices without chasing highs and buying at the wrong time. So what we also want to do with our analysis is identify a resistance zone. So a resistance zone, you can find it through a chart, through your technical tools. And that's going to identify an area where there probably is going to be a lot of selling pressure. So we certainly don't want to buy stocks in a resistance zone. We want to be cautious and careful because the sellers will probably come in and try to sell the shares in those areas. Now, resistance doesn't always hold. Eventually, the stock is going to break through resistance, but we certainly don't want to be buying at these zones. We often want to take some profits if you are interested in trading more actively. So we want to find resistance and we want to find support. So support levels are areas where the buyers are going to step in, where the price is likely going to hold on a retrace. And we just want to map those out on our chart before we enter a trade. Then we want to be patient and we want to let price come to us. We don't want to chase stocks. We don't want to get trapped. We want to be patient, and eventually a stock is going to retrace into a support zone. That is when we're going to put on our trades. And then lastly, we buy at support. So we enter the trades at the support zone. It's a minimal risk trade. When there's confluence, there's various tools telling us that that is a support zone. We can place our entry there. It's low risk and it's low stress. So what we want to do is we want to find confluence. So in a support zone and a resistance zone, you can often find confluence, meaning you can find various tools that are telling us that that is a support zone or that is a resistance zone. Then we don't want to fear support. We actually want to enter the trade at a support zone with specific risk management rules. So we want to keep our entries small based on our rules, based on your trading identity. And that's going to help you not over leverage a position or go in too heavy too soon. And then what you want to do is accumulate these bullish stocks at their support zone. So you can dollar cost average up as the market structure is continuing to trend upwards. And if a support zone doesn't hold, and the stock is still bullish, you can actually dollar cost average down and get a better risk to reward ratio on your entries. So why don't we look at a example of this over on a trading view again. So one stock that exhibited a big bullish breakout is this stock called Iron. So if we look at even back in the summer of 2025, we can see we've got a huge run up with all these green candles. And if we just kind of look at some percentages, if we kind of just look right around August 25 in this zone to the top here, the stock's gone up over 200%. So what you want to do is we want to be careful that we don't chase this breakout, because oftentimes we're going to come to what's called a resistance zone and there's going to be a sell-off. So many people, unfortunately, that don't know technical analysis may have bought Iron here in the high 60s, and Iron pulled back into a support zone and pulled back over 50% from the high to this next higher low. So we don't want to buy up here. We don't want to chase this breakout. We want to buy on this particular back test. So there's other technical tools that we can put on, like Fibonacci retracements. And there was an exact fib level right here at $69, indicating that this is a resistance zone. And you can see the stock never closed any candles above that fib. This is a resistance zone. We want to avoid buying here, but we want to identify resistance because we want to buy at potentially some of the pullbacks after a breakout. And if we also put on another indicator called the Gann square, we can see that this stock pulled back perfectly to market symmetry and almost touched this $34 level a few weeks ago. So we don't want to buy the breakout. This is a resistance zone. We've got a fib level. We've got our other Gann arcs in this zone. This is telling us that there's going to be selling pressure here. We want to be patient. We want to let the stock backtest and retrace a support zone right here where an entry could have been made. So there are many, many examples like this. Another stock similarly acting as Iron is Cypher. This had a big, big breakout and it ran up to a zone right here. And if we could put on a few fibs, we can see that it has broken above its previous all-time high. And we put some Gann squares on here as well. And we can see that for several weeks, it just could not break these Gann arcs. So this is a resistance zone. So we don't want to chase. We don't want to buy here. We want to potentially buy when the stock is back testing a previous all-time high at $15 or some of these angles and arcs provided by this Gann square. Now there's other indicators, there's other time frames that we can dive in and look at to confirm some support. But the idea is that we don't want to buy this breakout. We want to watch it. We want to be patient at a resistance zone. We want to wait for a stock to pull back into a support zone. And that is when you can potentially put on a trade. Now these candles can be deceiving. If we actually look at, the all-time high or just in this range down to the pullback, you're looking at almost a 40% drawdown. So sometimes those candles can be deceiving. This is a huge run up and a big pullback. So there's a lot of percentages in just, not buying resistance and buying a support zone. So that is what we want to do for entering these types of trades. Again, we don't want to buy the breakout. We want to buy the pullback. We want to enter at a support zone where other buyers are going to come in. So if we just do a quick review here, we never want to chase with this strategy. We don't want to chase a breakout. We want to wait for a pullback because stocks are always going to pull back. Nothing goes up in a straight line. It's always zigzags. There's waves. It ebbs and flows. We want to be patient. We want to wait for the pullback into a support zone. So the major rule here is that we only buy at support. Identify resistance, identify support with your technical indicators, and then only buy at a support zone. And this is how you can make trading simple and stress-free with this strategy. So if you like the sound of this strategy, if you want to learn more about it, we've got a full free course at our community on School. You can go to that at skool.com/trading. And if you're watching this video, there should be a link directly below it where you can come and join our School group for free. and you can learn more about the breakout backtest component and the strategy overall. So I hope that you found this useful, and I will talk with you in the next video.